get that sorted out, and we'll just do a couple of introductions and things first. So firstly, thank you very much everybody for joining us. We're really grateful to you for coming along to our third webinar. The playback and the recording of all of the previous webinars are available through the NI Cyber YouTube channel and the NI-Cyber LinkedIn page. So if you're interested to hear what we were talking about when we were talking about securely working from home and how to do that in an effective manner, and also training and HR and onboarding in this new remote world in which we find ourselves, and how we should be talking about virtual rather than remote, because remote sounds all a bit remote, then you can find the presentations and the video of the previous two webinars from that point of view. Today, I'd just like to introduce everybody and firstly extend our thanks as chair of NI Cyber. It's fantastic to get such influential people coming along to have a chat with our members and people from further afield. We've got Tech Nation, so we've got Gary Davidson here from Tech Nation, who's the Entrepreneur Engagement Manager, and he's going to be doing a lot of handling the panel, as it were. And then I'll let him do the proper introductions, but we've got Ollie, Volker, Hirsch, Ken Pentimonti, and Chris Trotter, who are all going to provide some useful guidance to us all. And we can see Volker's face now. That's brilliant. Thank you, Volker. So hopefully you'll find this very useful. I would just like to extend my thanks from NI Cyber to Carson McDowell, who are supporting NI Cyber this year, and we're really grateful to them for their input, and they're helping us to do things like this, and also to Gillian, who has organised all of this, Gillian Colin O'Leary, and is running everything in the background here. So with that in mind, Gary, I will hand over to you. Thank you very much, and I really look forward to hearing what everybody has to say.
Brilliant. Thank you so much, Simon. Well, good afternoon, everyone. Hope everyone is keeping safe in this weird and crazy time. The sun is outside, but we're locked indoors. But hopefully we can have an enjoyable webinar today. So I just want to kick things off, giving a little bit of introduction to Tech Nation, then we'll introduce the panel properly. So as said, my name is Gary Davidson. I am the Entrepreneur Engagement Manager for Tech Nation in Northern Ireland. And for those that don't know who Tech Nation are, Tech Nation is it's a not-for-profit organisation backed by DCMS, so Digital Culture and Media and Sport. Our HQ is actually in London, where Ollie is, and our kind of remit is to help digital tech entrepreneurs, predominantly in the software space, scale. And we do that kind of through three different main strands: through knowledge, through our reports that we do. We do a lot of data collecting in terms of the UK tech ecosystem, and our reports on our website, if you want to have a look at it, it's quite good because it breaks down every single region in terms of challenges, gaps in the market, investment levels, etc. We do a lot of connection pieces. So my role here, kind of on the ground, is trying to connect cyber companies and other companies across the board with other founders to learn from, to create a peer-to-peer network, to connect with investors for potential deal flow, and just connecting with the local ecosystem to try and understand the reality of what's going on here in Northern Ireland. But it's quite good. Last year we made a bit of a change to have 12 versions of me. So there's 12 versions of me across the UK in different regions. So it means that if I have a company in Northern Ireland that wants to explore Scotland, I have someone that's over there that they can sit with, get free co-working space, meet the key stakeholders, tap into investor networks, tap into potential clients as well, and it's all free. There's no cost to founders at all. So that's a really kind of unique position that we can be in. And the last side that we do is our growth program. And I'll not touch on that too much because I know Ollie's going to mention that. He's our cyber lead. But last year we did have two companies, SaltDNA and Scurio, formerly RepNight, on our cyber program. But Ollie can touch on a little bit on that. So that's a little bit about who we are and what I do. So I'm based in the Ormer Bass. For contacts that are on the webinar now that don't or don't see the recording, please reach out and we can see what kind of free support we can get. There's no cost to any founders as well. So Before we start our fantastic panel, I just want to introduce Ollie, who is our cyber lead for Tech Nation, and he basically controls the entire cyber cohort that we have, and we're going to be launching Cyber 2.0 quite soon as well. And there may be some good companies on there. I'll not mention anything else. So Ollie, if we could, I know you have some slides you want to share with us. So if you could fire them up on the screen, that'd be great. And maybe you could talk about the whole purpose of this panel discussion is talk about managing fundraising during these uncertain times. So Ollie, have you seen any impact already on the Tech Nation cyber cohort in terms of the companies? Could you shine some light on that for us?
Yeah, of course, Gary. Well, we've already seen that a number of companies obviously been affected. We've heard of some companies which had deals on the table be pulled. And there's then some companies which are now looking for bridging rounds, as well as companies which had, I suppose, plans to raise soon, which either now needs to be brought forward because their runway's been shortened, or actually in some cases as well, where actually founders are in a good position and they've actually pushed out that investment fundraise to even somewhere in 2021, which is kind of a minority and a very fortunate position to be in. But there's kind of a full range at the moment in terms of the businesses we're seeing. For this presentation, I hope, Gary, let me know if you can't see my slides. So I'm now just staring at them and not at you. But I'll quickly give an introduction to the programs, if that's okay. So yeah, as Gary mentioned, Tech Nation have a number of different growth programs. Cyber is one alongside AI and fintech that sits at the pre-series A stage. We take on anywhere from 20 to 30 companies a year on these programs. I took on 20 last year, and we'll be announcing 22 companies joining this year's program tomorrow morning. At the kind of post-series A stage, we have Upscale, and post-series B stage, we have Future 50. And in these 5 programs, we kind of support over 100 businesses a year, which are deemed kind of across the UK the best scale-ups. So on to kind of what we've been seeing. So in January, I was hosting a roundtable for investors, and I shared some of these slides. So we were talking about how in the UK, obviously there was the kind of emblems of Darktrace and other businesses which had already kind of raised great rounds, got these kind of amazing unicorn valuations. But then really in the last 18 months, we've seen a lot of these other businesses such as Snick, Egress, Secure Code Warrior come through the works and get kind of great valuations. And as these businesses come through, they kind of are kind of trailblazing and kind of setting the pathway. It's increasing investor interest into this sector, both domestically and overseas. And I particularly have seen that in our role as kind of an accelerator program. So we've had a number of intros in the last year to kind of large American investors who are going, well, we've actually never done a UK investment, but we're actually now seeing that actually there's a lot of great businesses coming through. So the kind of coalescing factors were all very positive in terms of much more interest in investing in cybersecurity businesses. Also, in terms of the figures backing that up, there were some huge kind of increases year on year, and I was kind of predicting that in 2020 we'd be on track to pass 1 billion. Seems unlikely, but we will see obviously what happens now. I think it's too hard and too early to predict how fundraising in total will be affected. And also, we were talking about why we should be excited about the future. This is again in January, because obviously threats are continuing to increase. When I first got into cybersecurity, it's described to me as an arms race happening on both sides, where we've got the good guys who are obviously building great businesses to protect us, but on the other side, the criminals are increasingly innovative and successful. In that way, they're also investing in their own tactics, and that's just continued to happen for the last decade and longer. And if anything, obviously we're now seeing even more disruption and even more opportunism by attackers. There's also some really good news in terms of the UK government. They announced 100 million in investment, and also in the budget announcements, there's a further £50 million committed to NSIF, which is investing in dual purpose technologies for both commercial and national security support. Also, just mentioned there in Capgemini's research, the likes of San Francisco, New York, and London being highlighted as kind of top cities in the world for AI and cybersecurity. And obviously that has, I mean, this isn't just about London, but London has a obviously a kind of wider effect in terms of the UK. So April 2020, what is the difference? Is cybersecurity virus resistant? Obviously, we had seen that, as mentioned in the previous slides, the interest in the sector has only been increasing. And although it's too early to tell, there's obviously positive and negative variables here. From investors I'm speaking to who are either already looking at cybersecurity or might have had a kind of light interest and kind of looked at cybersecurity deals but didn't make them, they'll probably be looking at this sector more now because it's generally fairly counter-cyclical. We see cybersecurity as a sector did well in the Great Recession and also in the dot-com bubble as well. So likely, again, it's going to do well. But however, there are also negative variables, particularly for any founders on here. There's a number of investors which have kind of family offices and high net worths as LPs. Typically, what might happen here is the investors will be asked to pause investments. And again, I won't go into too much detail because I'm sure the panelists will have a much better understanding of that than me. Also, obviously, investors will be saving for their portfolio, and they also might be consolidating capital into less risky companies at Series A and upwards that have already kind of proven their products and got traction. So it's kind of less risky there. In terms of demand, cyber is obviously a bigger threat than ever. And as a result, the total addressable market might lead to having new customers who actually realize that they're being attacked, they're under threat, and they need to take it more seriously. However, again, the variable, which it's hard to say which, what's going to be stronger here, is a number of SMEs are kind of going to be going out of business or distracted, and this could reduce your total addressable market. Procurement as well is not set up for remote working, so this could lead to, obviously, it's leading to slower sales. And I know from speaking to a number of our founders already that many of them have kind of seen their sales pipeline wiped out, but also some other founders have seen increased demand in the last couple of weeks, just depending on where their product fits. So in terms of products, again, before this, SaaS, a lot of our founders were pivoting to SaaS solutions if they didn't already have them, rather than doing on-premise. If anything, I think that's going to be accelerated now. The businesses which were already had kind of SaaS deployment were doing well. There's a number of other areas which are obviously are likely to do well in this period. So thinking of kind of mobile device management, multi-factor authentication, and cloud security. Now everyone is remote working. And in terms of valuations for you as a founder, likely in general across the tech sector, valuations are to go down. Before the COVID-19 outbreak, people were talking about valuations being frothy for quite a while. So a correction has kind of been due, but we're now expecting that even if you are a capital efficient business and fast growth, you are likely to take a kind of knock on the valuation. And this is also why some of our businesses are looking at bridging rounds, as a bridging round would allow you to wait until hopefully we're out of the worst of this and you can look back to a decent valuation. So finally, thank you for listening to me, and I'll hand back to Gary. I just want to say that, again, TechNation, we are looking after our 22 companies, but Gary and myself are here to help, so please don't hesitate to reach out to us. As a founder, I think the best thing you can do right now is be consistent and decisive investors will definitely definitely respond to that, and how you basically react to this situation will really help you in the future. But yeah, that's it from me. So Gary, over to you.
Perfect, thank you, Ollie. So that kind of moves us quite nicely into the panel discussion. So we're going to be focusing on managing fundraising during these uncertain times. So I have some interesting questions I'm going to ask the panelists. But first of all, I think the best thing to do is, could we get a little bit of an introduction or an elevator pitch from an investor, from all of you? If that'd be great, if we could get an introduction of who you are and a little bit about the firm you work for. Whoever wants to kick off, go for it. Or I'll choose.
I'll maybe go first, Gary.
Go for it, Chris.
So I'm Chris Trotter. I'm an investment manager at Clarendon Fund Managers in Belfast. We manage the Northern Ireland Co-Investment Fund. So we invest alongside other funds and angel investors. We also manage the Halo Business Angel Network in Northern Ireland. So we've got over 100 business angels who are signed up looking for early stage deals.
Perfect. Straight to the point. Ken, Volker, who wants to go?
Sure, I'll go. Thanks, Gary. Hi, I'm Ken Pentimonti. I'm with Paladin Capital. We're an early stage, late seed, Series A investor focused on the cyber sector. We invest in both the US and Europe. We've been investing in cybersecurity related companies for a long while. We raised our first security fund in 2002. So we've been in and around the space for a good period of time. We're a little newer to Europe. We came here in late 2015 and have been investing actively since then. I lead our European investing team. Yeah, we've been involved with Tech Nation for a little while now, and yeah, excited to be part of this panel.
Brilliant. Thanks, Ken. And Volker?
Yeah, hi, I'm Volker. I'm a partner in the early stage funds at Amadeus Capital. You, in the cyber scene, you probably know my partner, Alex Van Zomeren, slightly better. We have been active in cybersecurity, in Alex's case, also as a founder. He founded NCipher. But I don't know, Forescout is still in our portfolio, which by now is publicly listed. And we've been quite active in the space, not only in cybersecurity. We're probably the first proper deep tech investor that there was, based in London and Cambridge, but investing at seed and A pretty much across the UK, including in Northern Ireland, if we can find something.
We will. Brilliant. Thanks, guys. So yeah, to kick things off then, and please, everyone on the webinar, if you have questions, fire them in the chat. Dylan just put in there, and I'll read them out as well, and we'll ask the panelists. So we'll probably start off with Chris. We'll start with you, if you don't mind. How are you responding right now to this crisis? How are you managing the portfolio here in Northern Ireland? Can you talk to me a little bit about that?
Yeah, so I mean, definitely the existing portfolio companies are the focus right now. During this period of crisis, there, lots of the sales pipeline is drying up. Some of the funding conversations are slower, so we're helping them essentially respond with how they cut costs in the organization, how they can increase the runway, which customers they should really be targeting. Is the key thing right now, because time is of the essence, really, and it's easy to get distracted. But I think companies need to take decisive action right now so that they're still around in 12 months. So that's involved some hard decisions. Some companies have had to furlough staff. Some have had to agree salary cuts across the board. And I think companies are still waiting really to see the response from government. We're seeing that there's potentially a convertible loan note instrument, so we're still waiting for the details on that. But essentially right now it's firefighting and focusing on the existing portfolio companies, but we're still open for business on new companies. But we're seeing that our co-investors are just being a little cautious. They're focusing on their existing portfolio companies right now, so things are moving slower. So we're just encouraging all companies to take action now to just try and increase that runway.
Yeah, runway is king right now. And Ken, what are you noticing from the UK perspective at the moment then?
Yeah, I mean, a lot of the same things. Focus on keeping costs down, extending runway. I think we're trying to make sure that all of our companies are looking at all of their different financing options, both with internal investors, existing investors, with any new investors that they may have already been speaking with and may be far down the path with. There are a number of government options that are hopefully coming to the table. The U.S. is a little bit further ahead. We already have a number of small business loans and other programs that have already been put in place. So our portfolios there have already started to take advantage of some of those things. Look, as well, helping our companies look at their existing customers and their pipelines and figure out which ones are maybe the most resilient in this time of crisis, the ones that are most likely to continue to buy, continue to be active, focus on those. There's a lot of uncertainty right now, so it's kind of keep our heads down. Probably put on hold in most cases expansion plans to hire more folks. Just keep as much dry powder and as many options open as possible.
And Volker, from your side?
Well, I can actually sound on a more positive note. I mean, we do all of the above, of course. I mean, we have been triaging our portfolio on a quarterly basis anyway. That's part of our management process. So we tend to have a fairly good look, a fairly good view of the position our portfolio companies are in. But we also are actively investing in new deals, reason being, arguably, as an early stage fund, we did not, or often would not have expected, the maturity of a startup we would be looking at to occur in the next 12 or 18 months. So if the technology and the science is good and if the team is great, etc., why wouldn't we? But that's also, and I think that is something that founders need to be clear about. It will also depend often what's the vintage of the fund you're speaking with, and our fifth dedicated fund is just about a year and a half old or so. So we actually have a lot of time in it. And that allows us to also continue investing. I think there's about 4 or 5 press releases in the works for 3 or so new deals and a couple of follow-on financing supporting our portfolio. And one of those actually is one that has kind of coincidentally, or not coincidentally, but actually has seen a massive uptick in their business as part of the crisis.
Okay, interesting. And it's good to hear that, obviously the focus is on a portfolio right now, but it's good to hear that it's still open for business, because there is some investors, we've heard some stories me and Ollie have, of taking advantage of founders and, in this strange time. But, what kind of advice would you give founders if they were looking to close in the next 3 months? What strategy would you say? Would you be thinking post terms, or what would the strategy be there? We'll kick off with Ken. Oh, he's muted himself, I think.
Here we go. I think I'm on now. Sorry about that.
You're okay.
Yeah, look, I think, I mean, in terms of next rounds and thinking about financing, each company is obviously different as to how they need and want to think about things. And in some cases, folks have are already pretty far down the road, with discussions around new financing rounds. In which case, a lot of investors, you just heard Volker talk about the fact that they're still open and making investments. We certainly are as well, looking at new opportunities. In some cases, those companies can close those next rounds, and hopefully terms and conditions haven't changed at all, if any. So I think those companies, we're pushing them to continue to move forward on those rounds and get those done. And in other cases, if a company is starting a new round, right off the bat, I think that they've got to look a little bit more at to Volker's point, are those funds, where are those funds in their life? Are they actively investing? I think it really becomes a little bit more opportunistic if you're just kind of starting off a process. I would suggest companies that are just kind of thinking about new rounds, look internally first, look to existing investors, look to other sources of capital. My sense is that starting a new round could be a long process. There are a lot of funds that are, I think, setting the bar a little bit higher. The process is a little bit longer. There's just a lot of uncertainty out there now. Now, I think there's two things I would say. One is that I agree with Ollie. I think the cyberspace is a little bit insulated than other tech spaces and other spaces generally. So I think investors in this space may be a little bit more open to doing rounds. I think as well, as companies look at next rounds of financing, we are early stage investors, and we have long-term views. So I think many investors, it sounds like Amadeus, certainly ourselves, we're looking longer term. We think this is a shorter term issue, and that as we look at over the full life of an investment, that if it's a good team and a good technology and a nice opportunity, we're still going to make those investments. So I wouldn't say totally put new rounds on the shelf, but I think you've got to be careful not to spin your wheels, not to spend time with investors and in situations that that things don't happen for a while. I think it's best to focus on higher probability outcomes.
Faulkner or Chris, are you saying any comments on that in terms of strategy right now for founders?
No, I think that's absolutely right. I mean, if you want to close in 3 months, you will not close in 3 months unless you know this investor already. I mean, it's we've heard it. Some investors are stalling. We've been seeing that and focus exclusively on supporting their portfolio. So there will be less funds that will do new deals. But even the ones who do, if you don't know them as yet, everything takes longer and everything is harder. And this is I mean, never mind the crisis itself and the uncertainties that are thrown up with it, but everyone is working remotely. All of a sudden, I don't know, the lawyer doesn't only have to deal with his office, but also with his 4 kids in a small house. So there's a lot more. You have to grind much harder, and it will take you longer. And then last but not least, if you don't, if an investor doesn't know you, it is quite hard to get comfortable with the team. If it's to basically get to know each other and gain that confidence that not only is the tech great and has the founder all the credentials on her CV that you would need, but also the team gels. That is much harder to figure out and get comfortable around if you need to do GoToMeeting or Zoom.
Yeah, very true, very true. And Chris?
I think we're encouraging all of our companies to have a plan A, a plan B, and a plan C. So continue with your existing fundraising. As Volker and Ken are saying, you're probably only going to have success with funds that you've engaged with in person. So focus on continuing those conversations, but you should also be looking to your existing investors for bridge funding, because if you can't close this round, you need to have a backup plan so that if you can't secure funding, you've got a fallback plan. So you should be preparing all these companies should be preparing a COVID-19 mitigation document, and their fundraising should be a key part of that, and they should be circulating that with their board to get the input of all their stakeholders. So I just encourage any company to have a backup plan involving their existing investors.
And if founders are chatting to investors for the first time, it's very difficult to build rapport over video cam, and that's across the board in terms of even companies that are finding it difficult with sales right now. It's very tough to actually sell to someone over a video call. So how do you? Any tips, or what have you been adapting to in terms of having new conversations? When the rapport is such a strong thing in terms of getting your investors. Any comments there?
I mean, we're always hearing about the importance of warm introductions, and I think that is probably even more important now. And I think but that goes across the board. The more you can add validation points, the right signals from within your network, your business, just data points who make it easier to for an investor to decide that you should play. And that sounds all a bit blasé right now, but when you think about this, it is specifically at early stage. At seed, we effectively invest in a dream and a team. There is a nugget of hard science, of hard innovation, a great product, a great idea. Yes, that must absolutely be there. But if you turn this nugget into this great big company, that is kind of the dream. And to do that, you need a great team. So when you basically then look at this and try and map out all those little elements, the more data points and signals you can add to that in a pitch, in your discussions with investors and potential customers, the higher your chances to actually get somewhere. This is not investors being cynical and saying we're just sitting on our bags of cash. It is this is literally just trying to mitigate these changed circumstances in with the distances and remote communications, etc. that we face now.
I love that phrase. Invest in the dream of the team. Love that.
I don't think you necessarily have to seal the deal, in the next 1 or 2 months. You can have those touch points with investors. You can get your contact book built up for the round. You can have those initial conversations, and then when we exit lockdown, you can continue those conversations in person. So just focus on building the initial part of those relationships now, so that whenever we exit, you've got a solid book of investors to go to.
Okay, any comments?
Yeah, I think that's right. I think it makes it all that much more important for companies that are looking at new financing rounds to be organized, to push information proactively to the investors they're speaking with. To Volker's point, leverage the network as much as you can. If you've got customers, partners, other people or firms that know the venture firms that you're talking to, put them in touch with them. Give them some context for you as a team and as a company. So I mean, I think there are a number of things that they can do. I think Chris is absolutely right. I mean, this at the end of the day, the lockup will end. You will be able to get in front of people at some point, and I think it's the question is how far can you get here virtually in the meantime? And I think there's a lot you can do. And as I say, it's just more important to be organized and be more proactive in that process than maybe typically.
And obviously, in these uncertain times, has the metrics changed from an investor point of view? Are you looking for anything different when founders are approaching? Because it's such a different climate. Is there any particular metrics that have changed as an investor for you?
I wouldn't say the metrics have changed right now. I'd say that we're asking every company for their COVID-19 mitigation strategy, because we don't know how long this is going to last. So tell me what happens if this lasts for 3 months. Tell me what happens if it lasts for 6 months. What action are you going to take so that if we invest now, that the runway is going to last for 12, 18 months? So I think that's a key thing that's changed for us. That's something we have to put in our investment papers now to cover the COVID-19 mitigation.
Good. And Volker, Ken, anything there in terms of metrics changing from your side, or exact same?
No, I mean, I think that's right. I think you will be seeing, as was alluded to before, you will probably be seeing some pressure on valuations. Um, um, and we have been seeing this. The deals that we recently did, we honored the term sheets that we signed. So, but there is partially as a mitigation a strategy to the uncertainty we're all facing. I think there will be, as was the case, by the way, in every crisis. This was post-dot-com the case. This was in the financial crisis the case, where you started seeing protective provisions in term sheets that we aren't or hadn't been that familiar with over the past few years. Ratchets and participating preferences. That was pretty much late stage stuff. And but because that harnesses a little bit the position of an investor, these might come back in order to manage that additional risk. But in terms of the business metrics, what Chris said regarding COVID-19 mitigation, absolutely don't ignore it. If you show me your financial forecast the way you've drafted them in January, without change, that is just not credible. And I mean, the good news in inverted commas is everyone knows what it is. No one expects you to grow through this crisis as fast as you otherwise would have. But you've got to be honest and very clear and transparent, and the better pronounced your strategy is in that respect, you can use it as a strength because it shows that that you can manage through rapid and unknown change and crisis, which actually speaks to a management team.
Yeah, it shows the pure resilience as a founder as well. Ken, any thoughts there?
Yeah, no, look, I agree with everything is said. I do think that it really does vary company by company. I think one of the things that we would look for, not that the metrics generally have changed, but how much effect has this COVID-19 situation had on the company? Have they started to see slow down? There are some companies that we actually just looked at one that's got a next generation remote workstation technology that's this situation has actually been a boon for their business. And now that, I think that's an outlier. I wouldn't say that that's the typical, but point is every company is a little different as to how much of how much of an effect this has had or will have. So I think it's for us it's important to look at those companies specifically, look at their pipelines, look at their their trajectory, and get a sense as to how much of an impact this does have outside of their the normal business and a normal situation. But yeah, look, I think in general I agree. I think there'll be some pressure on valuations. I think that companies that are lower on cash are going to have fewer options, and they're going to look to raise rounds with terms, conditions, values that they otherwise wouldn't, and certainly investors will take advantage of that to a certain extent. Hopefully not in a in a terrible way, but I think companies that beyond just kind of growth will need capital just to to survive, and I think there'll be some good technologies out there that'll raise money at at values and terms that they otherwise wouldn't have.
And so that moves us quite nicely on the next question. In terms of founders, how do they show value right now and when sales are unlikely to happen? For example, I think Salty and A are on this. They are potentially launching new products which could go against Zoom from a local perspective, which would be great. There's lots of companies pivoting and doing well in the cyberspace. But how do they prove their value to investors right now in these uncertain times? Am I gonna have to pick someone?
Well, I think the reason why there's silence from us is because this really, and kind of alluded to that, this is really a case by case basis. I mean, is so different. It depends so much on what your product is and what your precise stage is and where you are. So it's very, very hard to answer this to answer this on a high level.
Okay.
We have some companies.
Sorry, go ahead.
With, I think this, if you're having difficulties with your sales pipeline and there's a real reluctance, obviously procurement processes are pretty disrupted, as Ollie was saying earlier. You can potentially go with a freemium type model if the customer does have a need for the software. In this instance, see if they can use it on a free basis for now, and then whenever we exit lockdown, that should provide a solid basis for converting into a commercial contract. But if you're trying to show progress, you're trying to show that product market fit, then consider freemium. Usually as VCs we would advise against that, but I think with COVID-19, any kind of traction, if you can demonstrate user growth, usage growth, and maybe some purchases off the back of that, then I think that's a good solid metric.
Yeah, there's a lot of companies doing that kind of space now. So there is to try and whenever they can do that flip into the paid version, they'll get some conversion. So yeah. Okay, well, there was one kind of point that I just wanted to bring up in terms of we've seen some kind of bad behavior in terms of some investors pulling term sheets, halving valuations, etc. We've seen some really crazy kind of examples. How do founders best handle that right now? How do they navigate that? Because it's a huge challenge right now, and there is people taking advantage of founders. So how do they best navigate that?
Well, yeah. Well, I think keep as many options open as you can. I mean, look, at the end of the day, there's not a lot a founder can do if individual investors do things like that. I think the best defense against it is just have other options, have other investors at the table, have other sources of capital in the short term. So that if you do have one or more investors at the table try to do something, you don't have to take those terms and conditions. You can move down other paths. That's easier said than done a lot of times. It's if you've got a round coming together and you're kind of relying on a lead investor and you don't have others at the table. I mean, it's I think in those situations you just have to you have to kind of see what's being asked and really kind of put a value on is it valuation? Are there other terms and conditions? What can you live with? What can't you? And how much do you really need to raise money now? I mean, is this money being raised for nice to have growth, or is it being raised to keep the company afloat and keep you on kind of a basic plan? And so I think there are a lot of variables, but as they say, at the end of the day, keep as many options as open as you can.
Any other thoughts?
I mean, yeah. So if it's outright predatory, and we have also been seeing some bad examples of this, I think you need to walk away from it if you can. But then, as Kenneth said, if it's around for survival, then I mean, exploit literally, basically. Command your inner Sarah Connor and do everything you possibly can to extend your runway, stretch it, etc. And Chris was saying as much earlier. Consider doing a smaller bridge that might help you get over this until you come out on the other end. Now, having said that. With the market conditions as they are and the uncertainty as it is, a certain correction in valuations is almost inevitable because the economic circumstances have actually changed. This is not someone taking advantage, and that bit might be painful, but that's not necessarily predatory. But if it's, you know, having a valuation, that, I mean, I couldn't see that. What we're seeing at early stage is that, you know, you have a 20-25% dip in that as a result. And you know, if you're honest to yourselves and you would basically remodel what you have, that is, you know, if the virus crisis is followed by a recession, which it very well might be, then this might you know, have an impact on the macroeconomic situation, which means that a lot of startups won't be able to grow as fast as before. But you know, if someone really is trying to take the piss, then you know, if you can, mark their name down on a blacklist and walk.
Yeah.
Yeah, I would agree absolutely there with Volker. You know, valuations over the last 5 years have been pretty obscene for the most part, especially in certain markets. So I think it's only natural when the economic circumstances change that valuations will go down. We're going to see fewer investors chasing deals, so there's going to be less competitive. You know, we're not going to go into an auction type process, so I suspect valuations will come down. I mean, if you are seeing investors back out of deals, just try and engage with them, try and understand why they're backing out. Is it an issue that could be resolved with something like a convertible loan note, where maybe this investment can convert at a discount to the next round, and maybe they're more comfortable with that if valuations are an issue. So just try and work with your investors. I wouldn't necessarily say a valuation discount is exploitive, just because of the economic circumstances we're going through.
Ken, any thoughts there or any comments?
No, I would agree. I mean, I think, yeah, look, if it's you would expect valuations to be under pressure to a certain extent, so I think that is normal. But I think, yeah, each situation is going to be a little different as to you know, what might be acceptable and what's not, and you know, so no, I mean, I think that you know, companies will have to evaluate on a case-by-case basis.
And I've just realized I've got some questions here, so I'm going to fire into some questions. So, where do you see any market opportunities emerging right now with everything that's going on, specifically in the cyberspace? Where do you see? I know Ollie touched on a few things, but is there anything that you're seeing in particular right now?
I think securing you know, remote communications. You know, I think you know, this whole situation is you know, forcing people to work remotely, deal remotely with you know, various business issues, partners, customers, etc. You know, and so these digital means of communication you know, are critical. I mean, we've obviously all heard about some of the issues Zoom is having and other platforms. I think, you know, securing those modes of communication critically important, and I think this situation just highlights that. And so I think that's an area we have invested some in the past. I think it's an area we'll look at going forward, because I think you know, even once we're all off lockdown and we kind of move forward, I think the way people do business will change to a certain extent and be more reliant on these digital modes of communication going forward.
Chris Faulkner, any comments there?
Yeah, I mean, the situation has kind of like thrown a couple of things in a fairly sharp relief, and Kenneth picked one. I think it's if you were to have a blank canvas, you know, now would be a great time to basically look, okay, so how things did change as part of this, because let's face it, you know, the digital transformation of society, which was underway, has now accelerated. You know, it's even the slowest moving old school company has now realized that there is a digital aspect to this. And in general, as a macro trend, I think Ollie had that on one of his slides, that is very, very good for cybersecurity generally. And when you basically, you know, take a canvas and start drawing to see, okay, so what are these elements that are now front of everyone's minds, where, you know, even 6 weeks ago, there were probably people were thinking about this. If you were you know, if this was part of your remit specifically in a company, but not necessarily you know, in front of the CEO's mind, now it very much will be.
Yeah, I would just add to that yeah, the way procurement tends to work is you work in an annual cycle with your budget. You have your budget for software tooling. You've got your budget for payroll. I mean, the 2020 budget now is just totally irrelevant. So all those budgets are being redrafted. So it is a good time to bring cyber to offer cybersecurity tools, because companies are going to need them. They're going to be redrafting their budget, and they're going to be allocating more because people are working remotely. So I think it's a good time to start those conversations with companies.
Another questions came through there in terms of early stage companies, in terms of the support from government. How likely do you think there will be actual support that they can access? Because, you know, there's a lot of early stage companies right now, particularly in the Urbana, etc., that may not have access to this. So any thoughts there in terms of the support for early stage?
The BVCA and the UK Business Angel Association are working with the Treasury on a new scheme. Details aren't quite clear at the minute, but it seems like there's going to be an element of convertible loan notes and potential grant, but we just haven't got the details yet. I expect within the next week or two we'll see further guidance on how that system is going to operate.
Yeah, I mean, there are a number of initiatives in the works, and I think what government does know is that, you know, how important the technology sector generally and startups specifically are for this country and this economy. So I think you can probably expect something to happen. There are many questions on, you know, should this be an equity instrument? Should it be a loan instrument, debt instrument? Should it be convertible? Whatever it might be. And yeah, we'll have to see that. But because the you know, business loans, etc., do not tend to work for early stage startups, I think everyone is pretty aware that there is a gap that needs to be bridged.
Yeah, and I don't have any more insight. Okay.
I know, by the way, that this is a very frustrating answer, because we said we don't know.
Sorry, Ken, what were you going to say then?
Yeah, well, I was just going to say I don't know either. I don't have any more insight than what was just said. I do know in the U.S., given we've got significant presence there with people and our portfolio companies, that they have started to move on some tangible programs that you could argue whether it's enough and is it getting to all the right places, but there is money being sent to small businesses, mostly in the form of loans, and potentially forgivable loans, depending on how they're structured and things that happen going forward. So things are happening there. I would hope that the UK starts to do some similar things, but I don't have any more visibility than what Volker and Chris just mentioned.
I would add one more thing there,
go ahead,
Gary. Around, you'll know all about this, having worked with R&D tax credits before, but I know HMRC are accelerating R&D tax credit claims. So what you can do is shorten your year end to get a set of accounts, and you can submit your R&D tax claim now. Hopefully that will unlock a bit of cash. And I know Innovate UK have a lot of programs that are open at the minute, so apply for those with other partners, and that could potentially help as well.
I'm just going to touch on one more question here we have, and then we'll wrap things up, because I know we're pushing on the time here. So it says, would you say fraud prevention platforms will have a great market opportunity this year, or only next year after the initial damage is done by bad actors? Any thoughts there?
I mean, the short answer is yes. you know, to what I said just before, it is just there's a lot more focus on this, because now everyone must be remote. You know, I mean, internet general IP traffic is up. People have to transact online, even if, like my mom, they would never have done this before. So, you know, there will be predators out there, and therefore there will be, you know, outrageous things and scandals that will be appearing in the newspapers and on the websites of pretty mainstream outlets, and that means that arguably demand for tools that respond to that would rise.
Chris or Ken?
Yeah, look, I think that's right. I mean, look, fraud and fraud prevention it's a huge issue prior to this situation. I think for a lot of the reasons Volker just mentioned, you know, it's been exacerbated, you know, currently, and so there's a big focus. So I think folks that are either already offering those kinds of tools, those solutions, or ones that you know, have adjacent technologies, I think there's you know, there's a big opportunity, and I think some of those trends aren't just going to go away once we're off lockup. I mean, I think that you know, you'll continue to have a lot of that kind of activity. So I think it's that is a big and growing area, big opportunity for a lot of companies.
Yeah, I think that market's definitely, you know, it's probably going to double, you know, with lockdown. But the key thing is how are you going to differentiate your product, because there's a lot of existing tools out there. So what are you doing differently so that your competitors aren't going to gain that market share for themselves? So the same factors still apply.
So let's kind of end things off with positive notes, positivity, not negative things. I hate negative things. So any final comments in terms of for founders that are managing right now? Any kind of tips or words of wisdom on a positive note, please?
Well, I would say that look, this hopefully is short term in terms of the absolute lockdown. I think there'll be longer term economic impacts, obviously, but you know, look, I think that you know, in the long term, especially in and around the cyber sector, there's still great opportunity. You know, that you know, companies with good technologies, good teams should just keep their heads down, make sure that they do all the smart things we talked about here, but there's light at the end of the tunnel, and I think there's still you know, it hasn't tarnished the longer term opportunity for most companies.
When you wake up tomorrow, you will be one day closer to the end. That's one thing. But it's also, I think, businesses that you build in times like these will arguably be better businesses. And that should mean that, you know, once we come out on the other end, you should actually be in a better position than people who build their businesses in the fat time, so to speak. And I know that this is of little short-term solace, but I think the premise still holds.
Yeah, I think as Volker and Ken says, this is, you know, a key test of resilience, and if companies can make it through this you know, period of time, then they'll be much stronger at the end of it. I think there's still a lot of opportunities for companies. It's a good time to make hires. If you've got the cash to make hires, then you're going to be able to hire people, you know, on lower packages than you maybe could have a couple of months ago. And it might be an opportunity to acquire smaller companies in your space that are maybe just don't have that resilience and can't make it through, but maybe they've got good technology. So I mean, if you have technology that was good before this crisis, it's still going to be relevant after the crisis. So just focus on making it through.
Good, love it. Yeah, so I think that kind of pulls us quite nicely to an end there. You know, survival is everything right now. Cash is king, and you know, we're all here to help. For anybody that's on the call here, or anybody sees the recording, please reach out. I'm sure Simon and Gillian can share our contact details, and we can try and help each other, because this is what it's all about. You know, we're all in this together, so we need to collaborate and get through this together, and we will get through this together. So we will. So I just want to thank the panelists so much for the insights, and we will share details after, just so anybody can reach out. I really appreciate you taking the time, and I'm just going to pass over to Simon for closing remarks. if we can hear him. I think we've lost him.
I think he wanted to unmute himself and unconnected himself instead.
In absence of Simon, it's Gillian here. Look, thank you all very, very much for that. That was brilliant. I have had such a level of engagement with the questions. There's so many questions that we didn't get to. I see Simon's back on here. So we'll try and get answers maybe very broadly to those questions somehow or another. But I have a recording of this, and I will certainly share Ollie's slides if that's okay as well. So thank you all very much. I'll just let Simon say the final goodbye.
Yes, thank you very much. Sorry about that, I don't know. You know what tech's like. But I wanted to sum up just to say thank you very much to everybody. I also wanted to point out that actually, with regards especially to the last question that we had about the fraud detection type things, the FCA have recently set out the Financial Conduct Authority in the UK have recently set out their priorities for 2021, especially in light of the pandemic issues. The top two that they said throughout the pandemic is that they want to protect the most vulnerable, ensuring they can get the financial services they need. Secondly is tackle scams. So there's still going to be a massive focus on this, especially as the pandemic develops. And also being when the pandemic finishes, thinking of things like relying on safe and accessible payments services to receive their pay or benefits. So there still is a massive focus on security throughout this crisis and beyond. So I think that's something that we should all try to remember. And in the words of, I think Volker kind of gave a good summing up there, especially, but my favorite phrase about this is "this too shall pass." And I think that's a useful way to think about it. So again, thanks to Gary for being the most excellent chairman. Thanks to Kenneth, to Chris and Volker for giving us and sharing your fantastic insights. And we were actually just discussing maybe we could try and run this again in a couple of months' time and see how the world has changed after that. So maybe we'll see each other's faces on screen in a couple of months' time with some different news. So thank you again, everybody, and speak soon.
Good stuff. Thank you,
guys.
Thank you, everyone.
Bye-bye.